The US dollar is dropping. Groceries cost more. Okay. Gas is volatile. Rents are rising. And yet, you're told inflation is cooling down. Key. But if you've checked your wallet lately, you know that's far from reality. So, what's really happening? Why is the dollar losing strength while the cost of living keeps climbing? Okay. This story isn't just about money. It's about your future, your freedom, and your ability to survive in a system that's quietly squeezing the middle class. Let's break it down. The US dollar has long been seen as a symbol of global strength. But in recent months, the dollar index, which compares the USD to a basket of other major currencies, has been sliding. Why? A combination of interest rate policies, slowing economic growth, and foreign central banks adjusting their own currencies. What makes this fall different, though, is timing. Just when the dollar weakens, Americans are also grappling with high costs, from housing to healthcare. Traditionally, a falling dollar boosts exports and tourism. But today, it's dragging down purchasing power and revealing a deeper fragility. Even as government data claims inflation is down from its peak, core inflation, the kind that hits daily necessities, remains high. You've probably noticed. Bread costs 40% more than it did 3 years ago. Gas prices spike and drop unpredictably. Rent is eating up over 40% of average incomes in some cities. So why does this happen? Because inflation doesn't hit everyone the same. Big corporations pass rising costs onto consumers. Wages haven't kept up, okay? And central banks are caught between raising interest rates and not crashing the economy. Case the gut punch. Even if you got a raise last year, your money buys less. In real terms, American households are earning more on paper, but less in power. A $70,000 income in 2023 feels like $58,000 in 2019. Everything, from eggs to electricity, is eating into your savings. Meanwhile, the stock market booms, but so does corporate debt and everyday people. They're using credit cards just to stay afloat. Average U.S. credit card debt hit a record high, over $1 trillion. Interest rates are also at 22% plus for many. This isn't just about America. The dollar's decline is also shaking global markets. Countries like China and Saudi Arabia are exploring alternatives to the dollar in trade. A slow shift away from decades of U.S. financial dominance. If more countries stop using the dollar as the global reserve currency, the effects will echo back home. Higher import prices, weaker influence, and less economic control. So what now? If the dollar weakens, inflation persists, and wages stagnate, what can you do? Start building multiple income streams. Freelancing, online stores, consulting, even content creation. Smartly, avoid short-term hype. Focus on long-term value. Index funds, dividend stocks, hard assets. Own assets, not liabilities. The dollar might fall, but real estate, gold, and businesses tend to hold value. Stay educated. Financial literacy isn't optional anymore. Cut lifestyle inflation. When your income goes up, don't increase expenses, increase savings. You don't control the dollar. You don't set inflation, okay? But you do control your mindset, your hustle, and your ability to adapt. America's economy isn't collapsing. It's transforming. The question is, will you get crushed by the change or capitalize on it? If you found this breakdown helpful, hit that subscribe button. New videos every week to help you survive and thrive, even when the economy doesn't want you to.